Welcome to Biz Ed Made Simple. In this video, we're looking at profitability ratios, specifically return on capital employed. Now, the equation is on the screen there, you can see it. But lots of people think that's all there is to it and they just calculate it. Now, the calculation is quite simple, but it's far more important that you get the analysis marks of accounts and you really understand what this number means. Most people don't. So in this video, I'm going to be breaking it down. I'm showing you it's actually a pretty simple thing, and I'm going to show you why businesses are so eager to calculate it. As ever, I'm going to do it with a silly story, so let's get into it. Now, the silly story this time involves me, Jack, and my imaginary brother, Tim. Now, if we say Jack in 2024 had a profit of 10,000 euros and Tim had a profit in 2024 of 30,000 euros, I've got the question at the top, who is performing better? Now, you're probably saying, what an easy question. Jack is a loser. Jack's rubbish. He's only got 10,000. Tim is smashing him here. He's got 300,000 in 1 year. That's loads more than Jack is making. However, I don't want to lose this fight if I'm fighting against my brother. I'm going to say, actually, Tim is having a disastrous year, or has had a disastrous year, and Jack has done really well. Now, pause for a moment and think, how can that be the case? Doesn't look like it. No tricks of numbers, no tricks of euros, but Jack has done really well and Tim has done really badly. I'm then going to say that I'll be able to explain why, and you hopefully will believe me. You'll say, oh yeah, you're right, without anything technical, without any calculations. Even if you've got no understanding of business studies, I'm going to put a little sentence up there and you're going to say, oh yeah, Tim really has had a bad year and Jack's done really well. Pause the video now if you want to think about that and try and work out what I'm going to do. But I'm moving on. So let's go into it. Here's the sentence. So Jack, me, runs ECM Tutors, the website, and does a little bit of YouTubing. Tim, on the other hand, runs Nike International. Now, if we look at those numbers again, hopefully I've convinced you. You're saying, well, hang on a minute. If Jack runs this tiny little website that probably hasn't put much money into it, and he's making 10,000 in 1 year, he's doing pretty well. I'd love to be making 10,000 profit from the ECM Tutors website. Whereas Tim, if you're running Nike International with all the money that's ever been put into Nike, and that's a lot, and you're only getting back 300,000 in a whole year, in the whole year of 2024 as profit, well, you're not doing very well at all, I would say. That's pretty poor for all the money that's gone into it. Okay, that's the background, but that is return on capital employed. We just need to get technical with it and put the terms. So let's have a look. So if we look at Jack and the calculation here, we're going to say that capital employed is roughly all the money that's ever been put into the business over its life. So Jack has put, in my example, 20,000 euros over however many years, maybe 10 years or whatever, but he's put 20,000 euros into ECM Tutors. Now in 2024, he got a profit of 10,000. If we put that into the calculation, 10,000 divided by 20,000 times 100, then he's got a return on capital employed of 50%. What does that mean? Well, it's pretty good. It means for all the money you've ever put into the company, you get 50% of that money returned to you, return on capital employed, returned to you in just 1 year. That's pretty excellent. If we look at Tim, on the other hand, in this, we're saying, Tim, I don't know what Nike really has, but let's say Nike has had 10 billion put into it as capital employed for all the years it's been open. They've had 10 billion euros put into the company, and he only got back in 2024 300,000. That's a pretty pathetic return. 10 billion put in, and with all 10 billion, all you've managed to return to yourself as profit is 300,000. If we put that in the calculation, 300,000 divided by 10 billion, he's got a return of 0.03%. Pretty pathetic. So if we have a look at these two things now, Jack has a return of 50%, Tim has a return of 0.3%. Jack clearly has performed better as a manager. However, it isn't just about performing as a manager. We look at actual companies. So you could say ECM Tutors has had a return of 50%, or Nike has had a return of 0.03%. But you could do it for a manager as well. Now, You're probably thinking at this point, but what is a good number of the return on capital employed? Well, like all of these ratios, there isn't always a set thing. It depends. You probably want to compare it to previous years or companies in the same industry. So if we look at this, we're saying how much trouble is Tim in? How badly is Nike doing? Well, they'd want to compare it to other things. So the first person they might compare it to is, went the wrong way, is Jim. If we said Jim was the manager of Nike in 2023, well, if we look at that and he had a return on capital employed of 0.01%, well, Tim's not done quite so badly then, because clearly something's going on at Nike. You could say, well, at least it's heading in the right direction. It's gone up since 2023. However, if I then add more information and say, well, Sue works and runs Adidas, or just Adidas the company, in 2024, we'd say, well, if Tim got 2024 in 0.03, what did Adidas get? And if we look, and Adidas had a return on capital employed of 20%, then I think Tim's got some questions to answer again. Why is Adidas doing so well, getting its 20% of all the money it's ever invested back in 2024, when you only got us 0.03%? So, return on capital employed is something really useful when comparing profitabilities. It's just too simple to look at, say, you got 10,000 in a year. We need to compare it against all the money that's ever been invested in it. That's it. Hopefully you fully understand it. If you've got any questions, write them below and I'm happy to help. And a like and a comment is really appreciated. That helps me out as well. Hope it helps. See you on the next video.